Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back.
Sure.
Happy Friday. We got the man, the myth, the pessimist, the bear, Santiago.
Ay, cabrón. Listen,
So, dude, I thought it was gonna be a very bullish episode last time because you weren't here, and it just turned into Rob and I arguing the whole time about VVV. So, I
hey,
think we
that got quite the controversy, right? I saw a lot of people like posting, and then I think saw Hasib kind of went out and
people were
did
very
his
mad
own
at
thoughts.
people thought Blockworks was like attacking VVV, and I it really was not the goal. And I would just say, like, I do want to start the episode saying I have a ridiculous amount of respect for Eric and VVV and the Venice team, but it was more of a commentary on the state of the industry in this dual model. So,
Yeah.
anyways, how you doing? We'll talk about that in a sec. How you doing?
Coming back from the Cellini conference in Cannes, I think is one of the best private conferences out there, other than of course Blockworks ones. Really good crowd, very good discussion. I was on a panel and obviously a debate discussing, you guessed it, the prompt was the debate was, are generalizable L1 tokens investable? So it was like such an easy debate to have, right? It was like me,
Who'd you debate?
I debated Brian Pellegrino from Layer Zero, phenomenal builder, and Sahir from Plasma.
Mm-hmm.
Sahir,
Mm-hmm.
I believe is his name. If it's not, I'm sorry, but I think it's here. And then Jan Lieberman from Delphi was on my camp. Um, Good discussion. We won the debate, in case you're all
Nice.
wondering.
That was a 2v2. Interesting.
Yeah, 2-on-2.
Nice.
No, it was really good. I basically got to share a lot of what I've been thinking yet again with a little bit of a twist, and you had the benefit of seeing it. So no, it was good. It was a good discussion.
Yeah, and markets are so bad you're just having to hold your mic. We have no stand today, or what's going on with this?
Yes, markets are tough. What can I say? No, this is me bringing passion. I'm trying a new form. Of like Wolf of Wall Streeting this one. No, I
All
changed
right, so
desks.
we're
I
feeling
changed
good. We're
desks. But
feeling good.
the stand doesn't work.
Good. Good. Okay. Well, I don't actually know how much you want to share here, but I got your investor update for Inversion. And look, we can cut this out or we can skip through this quickly if you don't want to talk about it. But I thought it was one of the more thoughtful investor updates I've actually ever received. And
Thank you.
most investor updates, and even the way that Blockworks sends theirs, oftentimes, the way that we do ours, it's like, here's our revenue, team size, bank account, financials. Here are the wins, the losses, and here's goals for the next quarter. And this was I think you've done that in the past, but this one was it was several pages long, and I think it just outlined your entire not only thesis today, but what you've learned since starting Inversion. Right, you guys had this goal of acquiring a company and embedding it with crypto, and I don't want to put words in your mouth, but it seems like you're updating the strategy. So again, we can skip through this, we can even cut
Not at
this,
all.
but
Not
if
at
you
all.
feel comfortable, I'd love to
Yeah.
maybe dig into your learnings.
Well, first of all, thank you. I mean, testament to the team. Also, obviously, the what goes into producing the shareholder letter is a combination of a collective effort. So,
My
um,
team has been amazing. I've got Mr. Perplexity, I've got Mrs. Claude, and I've
got
got
Fable 5. Um, no, happy to share. So I was actually thinking, and I asked you, like, hey, is probably will share a redacted version because I do think it's. Um, I'll start from the very end. The very end was just like, if our investors have seen hard evidence on the contrary, operating results, not pilots, we would rather be corrected now than later. And I think so. Like the we've been quiet for a while. Under the hood, we've been doing incredible amount of work on evaluating. Basically, the prompt is, hey, can we buy businesses where we can implement crypto and have a great return on investment, commensurate with the risk? And I want to emphasize the last part because None of this is that crypto is not useful. None of this is that the tech is not real. It's on the contrary, I wouldn't have started Inversion and I wouldn't be here if I didn't believe that. And I think there's a lot of evidence to support that. Like, you go look at your own dashboards, and I don't need to regurgitate any of that. The nuance is uh, is i- is by implementing crypto in these businesses, does it actually produce a above market return? And I'll hold myself really accountable to that and the rest of the team. Because rule number one of investing is don't lose money, and rule number two, as Charlie and Warren would say, is don't forget about rule number one. And I think in this journey, it's like I started Inversion under this hypothesis. I really wanted to understand, like, how real is it? How are we going to see it? And I took it
Under
upon
what
myself.
wait, so maybe restate the hypothesis. What was the hypothesis for
The
Inversion?
hypothesis was, can you buy a business and make it dramatically more efficient with crypto? And we've looked at, you know, 20 plus sectors, companies
Yeah,
within those sectors.
tell me about the journey, because I know you guys were looking at the
Yeah.
MVNOs, you're looking at,
I
like,
start
a
yeah,
whole host of companies, yeah.
totally. Yeah, people might have heard me say in here and other podcasts, like, the MVNO thesis was predicated on this idea that you could bundle telco and fintech together. I'm a student of history, so, you look at places like the thesis is stablecoins. There's a huge demand for stablecoins outside the US, especially, in places where there's not enough financial infrastructure and services. Stablecoins have really worked, and you look at Tether as a true testament of that. And then you look at companies like M-Pesa that bundle telco, basically on everything app, right? Telco and fintech. And so I said, gosh, the best way to build the largest fintech in a place like Mexico or Latin America is through telco because you're a core service. Um, what I've started to notice is, like, once we started looking deeper and deeper into MVNOs, which you're it's a very um, competitive business in on its own. MVNOs like rent infrastructure from large carriers. You don't own the infrastructure, and it's basically, can you acquire customers? Problem is, these businesses have terrible unit economics. There's a lot of churn, and there's no cash flow. There's not meaningful cash flow, and so it's really hard to underwrite this bundling when you don't have cash flow to invest in the business to make the transformation. And again, there's a lot of risk, and so that strategy kind of fell on its own. Um, and we've deprioritized it. Um, and we then looked at, like, credit, this idea of, like, hey, could you borrow on chain? Rates are low. Yeah, and so I guess I'm opening the letter now, but we looked at another sector we really looked at was credit. Like, hey, there's a number of businesses outside the US that just don't have access to capital markets. Like, they don't have the same availability to capital. And we uncovered, like, so many of them. And I talked to, like, a former Ribbit partner who launched his own fund. He's investing, like, in places like Venezuela and Colombia and Asia. And I think our conclusion there was, credit is challenging. Like, there is capital markets on chain work mostly for crypto backed loans. Anytime you start doing anything other than that, you're faced with a couple of challenges. One, not to mention, is like smart contract risk. Other risk is you're borrowing variable. And maybe with Maker Sky, we kind of looked at what they're doing with Better as like an interesting experiment. Um, and you're exposed to, like, these utilization rates and borrow curves that are difficult to underwrite. The true So when you package all that up, the true borrow rate for, like, what I would call, like, business, like B2B borrowing, business lending, is closer to 8 to 12% on chain today, not the 2 to 5% that you see in Aave and stuff. And so that's not competitive with TradFi.
Yeah.
Because again, if you wanna buy a good business outside, like, a good business in the real world has access to capital at a cheaper rate. And the question is, well, if I'm buying a business that is borrowing at 20%, that's likely not a good business.
Hmm.
There's, like, a lot of risks embedded in that. So again, the common denominator, I'll just say it now, and then I can keep going, and interrupt me whenever, is the mistake I made was when you hold constant the filter of which business I wanna buy where you can release a lot of value with crypto, you end up looking at businesses that are not great businesses. They're kinda broken
Mm.
in their own way, they're kinda melting ice cubes, they're out of favor, and
You're
you
ca
would have also heard me
you're catching a falling knife in
you're
the
catching
private
fun
equity
like,
version of the
yeah,
term. Yeah.
you and I have talked extensively here about remittance companies, companies like Western Union. Obviously, go look at the chart and the financials, and it's a business that is challenged, right? You have uh, more technology forward companies like Remitly and Wise that have like really compressed the unit economics on certain corridors. They're also facing heat from like companies like Felix Pagos and stablecoins. You know what I mean? And I instructed the team to go, let's look at pretty much any remittance company that we could buy. After hearing Western Union and like, you know, boldly claim that they could like really cut pre-funding. And so we go out and, we talk to a number of remittance companies. And again, remittance companies are challenged. The multiples have come down. The business itself is again a melting ice cube. And what we found there actually more revealing is it's not a it's not a like in order to fix a remittance company, it's not a technology problem.
Mm.
It's a stakeholder incentive problem. And again, just going back to my initial observation, like the technology works, like stablecoins are very real. You can definitely implement stablecoins to move money in real time, but you also need if you're dealing with stakeholders that don't want to implement the technology, it's a hard sell, and it's not one that I want to undertake.
Yeah.
I'd
Yeah.
rather I'd rather like we did a lot of work there. We came out of that bearish. I'd rather be in wait and see mode. Like if Western Union can pull it off, then we'll re-engage, no problem.
Yeah. What's your take on distribution? Right. I think a couple times on the podcast you've said, I want to buy distribution at the best price possible. If I can get cheap distribution, I can do a lot with that.
Yeah.
Tell me your takeaways from
Yeah.
distribution.
Another mistake. I think not all distribution is created equal. And I guess said differently, you want to buy a business that has uh, pricing power, brand, um, and is not operating in a super competitive industry. That's what makes a great business. Those are like real moats. That's a downstream effect of that is distribution. Because distribution is like, do you have an install base? Do you have connectivity with a customer? If let's apply that again in a company that might have distribution, but if a company has distribution, it doesn't have pricing power, it doesn't have brand loyalty, it doesn't have profitability, distribution doesn't matter at that point.
Hmm.
You mean? And so, I think you can get into this trap of buying businesses that have a huge install base, a huge user base like MVNOs, but
Yeah.
it's not high quality distribution. And I think there's a nuance between like aggregation theory.
High quality meaning the users are sticky, or the users are valuable, like kind of I dare I say like wealthy users who you can upsell more and more products.
It has to be both, in my opinion.
Yeah.
Because, for instance, in the telco case, you could definitely have access to like millions and millions of customers. The question is, are they actually going to be willing and receptive? And how costly is it going to be for you to upsell? Like upselling is not like a slam dunk in and of its like I'll get in the example of MVNOs, I very quickly understood like, wait a minute, we're gonna buy an MVNO in a place like Mexico that doesn't cash flow, and you have Nubank, which is the best run fintech in the world, probably absent Revolut, that has invested over $1 billion in Mexico and has only converted like 9 million users. If they can't do it for $1 billion and I don't have cash flow to do it, what do I like? You know what I mean? At that point, it's a hard sell.
Yeah. Yeah.
Um, so I guess, yeah, distribution, I would reframe that now today as like just I love listening to this podcast this week that an invest like the best. He talks about like big ideas and $1 billion PDFs. We should talk about that. I think simplistically, inversion now is and part of the investor update was like I want to buy a good business. I want to buy a quality business, and I think a quality business by default has all what makes a quality business is it cash flows. Like if a business has been able to produce cash flow over different market environments, That tells you everything you need to know about a business, right? Like if there's only one filter, it's that. Like, are you if a business doesn't oh, and the second piece is I think a business that can be transformed with technology easily is not a good business.
Interesting.
I would actually I'd be curious to get your opinion because in media, like newspapers, for instance, like they were definitely transformed with technology, but newspapers technology is not like the be and
But the
end all of a
newspaper
newspaper.
companies weren't the ones who won, by the way. It was media was transformed, but it went to TikTok and it went to Facebook.
Yeah, yeah,
Yeah, yeah,
exactly.
100%. Yeah.
And
What's your
so I think yeah, go ahead.
go ahead.
The other so we talked about remittances, we talked about MVNOs, we looked at credit, we've talked about that already. The other sector I want to talk about, which is really popular amongst crypto crowd, is FX. And we actually did run RFP for a very large multinational industrial company. And they said, look, we have operations all over the world. We want to do treasury management. We want to be moving money much faster. And we said, okay, great. We went out to a bunch of providers in crypto and said, hey, quote us your best rate. What can you do here? And what we've learned is quite the contrary. Like most of these crypto aggregators were quoting above the mid market rate, like 20, 50 bips. That's a lot. And especially for in exotic corridors, like in places like Colombia and Egypt and Israel, and it's a liquidity problem. It's not a technology problem. It's just a liquidity problem. You need to have liquidity against these pairs to be able to price competitively. And again, that someone's going to solve that, and it's going to be great. But we don't. That's not the type of risk that we're willing to undertake at this point.
Yeah. Yeah. So that gets into what I think the important question, which is what do you do with inversion now, right? Because you raise this money, sitting
Yeah.
on some funds. So are you gonna do you wind it down? Do you invest in other things? Do you broaden the mandate? Do you get more specific? Like, there's also another question here, which I think is probably tied to this, which is there a play on AI that you
Yeah,
will look
totally.
at? Is there okay? So yeah, what's the update?
Yeah, the update is broaden the mandate, and it's first and foremost like go buy good businesses. That technology is orthogonal to value creation. So, like, you want to buy a good business whereby implementing technology, and that is AI, that could be crypto, that could be other things like best practices, will make that business a better business. It's as simple as that. And again, as a student of history, I look at how the two best examples of what inversion is trying to copy is Berkshire Hathaway and Constellation Software. Everyone knows Berkshire. They got started very small, and they were a super small team as a holding company. They just Warren and Charlie just went out and bought really good businesses, like good operators, just give them money, good brands, good quality businesses. You look at all their shareholder letters. Mark Leonard started Constellation after leaving he was a venture capitalist, he left, and he built this holding company buying software businesses. You know probably the story really well. Most people would be surprised to know that Mark Leonard started with 25 million Canadian dollars back in 1995. And he built a $500 billion plus business, and he would do 2 to $4 million acquisitions, and he did many of them. And he was just a capital allocator, right? He built what I think is like a really good proprietary data set of what makes a good software business. So he got to a point where he had such good understanding of what a good software business was that he could very quickly buy or not or make a decision of capital allocation because he had the perfect information of what a good software business is. Margins, magic number, growth, sector, vertical, horizontal, like everything, right? And so so we're broadening the mandate, and we're going to deploy balance sheet capital. Like that's my
Nice.
desire. That was a shareholder letter. Of course, we have a shareholder meeting. But yeah, that is like it's been very. This whole process has been incredible. Has really been a validation of a couple of things. One, it's been very revealing of a couple of things, theories that I had in my mind. One of them is that the holdco model is better than the fund model. If we were a fund, it would be you like you have this identity, right? You have a mandate to invest in crypto, and I think that's something that at the Seleni conference I was talking to a bunch of fund managers, and they're like, guys, I wouldn't want to be in your seat because you've sort of like promised your LPs you can invest in crypto, and I think all privately will tell you that they're sort of moved on. You see it, right? They sort of want to invest in other things like robotics and AI. And I think credit to Paradigm, right? We just came out this week saying they
Yeah.
launched and they got a lot of heat for it, like in their prior fund where they said they're going to pivot to AI, and everyone was like laughing at them. I think they're smart. That's what you should be doing. Like the game of investing is ultimately truth seeking. And sometimes you're going to figure out stuff that doesn't conform with your hypothesis. And it is your responsibility to adapt. I think it'd be it'd be irresponsible not to explore implementing AI and other stuff. It would be irresponsible to buy shitty businesses just to prove to the world that you can buy a business. And it would be irresponsible to buy a business to prove that you can implement crypto. Of course, you can implement stablecoins to a business overnight. Any customer of Stripe has already done it. The question is
Totally.
it going to release value to outperform the broader, like, you know what I mean? To outperform the market, right? If I was having a discussion with Brian after the podcast, and, he's an investor, he's great. And I said, "Bro, Brian, like, if the answer might be, if you really wanted to be long this thesis of like businesses implementing crypto, well, honestly, go buy Stripe secondary and go buy Robinhood equity, because I do think that the larger players are likely in a better position to reap a lot of benefit from this. And you're kind of already seeing with the Robinhood chain, we should talk about that,
Yeah.
and Stripe. And, I think they're in a better position. Um, and I want to just emphasize, like, it's not to say that crypto won't work. Of course, you can buy business and shave some costs and improve that business with crypto. Like, that's not the message here. The message it's not sufficient to clear a good return on investment.
Yeah, yeah. Maybe let me ask it differently because I think the thing that people would probably be wondering right now, and the thing that I'm wondering is, are you bearish on crypto right now?
That was also part of the letter. Because I do get asked this question a lot, right? You hear me talk of like, in these debates, and I here's what I wrote in the letter, and I firmly believe is, um, first off, I'll say I think as a group, Inversion has done probably the most amount of work going deep into trying to understand how crypto fits into ordinary traditional businesses. I think the technology is real, the interest of businesses is real, the willingness to implement is real. Like stablecoins are real, tokenization is real. Um, and here's where I come at it: the value accrual is still not resolved. And
Mm.
open source networks have a habit of pushing value away from companies and onto consumers. Like technology, the curve of technology, this well, is the cost of production is like technology is incredibly um, disinflationary, and a lot of that just ends up in consumer surplus, right? Like, and I don't want to be caught on the wrong side of that trade. And I
Yeah.
still don't know where value is going to be accrued. I still don't know if Tempo is going to be a profit center for Stripe, or is it just going to help Stripe, the actual business. I still don't know how popular, like what Robinhood chain is going to do to Robinhood. I certainly know that Robinhood equity probably benefits. I probably know that Stripe equity business benefits, but I don't know what that means for smaller businesses that we're looking at, which is the other thing that is worth mentioning is we're looking at much smaller businesses. Um, so I am I am waiting to see more evidence, and this is why I just ended the letter. I'm like,
Mm.
I by the way, as part of this journey, we've been at it like systematically for 8 months, looking at many, many different sectors. And as George and my team likes to say, it's like turning over stones to see what's underneath. I think that's a really good way to kind of crystallizing what we do. But a lot of this was also serving crypto founders. I would go to them and say, a lot of them in my portfolio, and say, hey guys, have you seen evidence of like businesses adopting your solution? And is there any clients or potential clients that you think we should be looking at to invest? And you'd be surprised, but a lot of them were like, no, can't think of any. I said, what do you mean? Like, none? I said, and I think this is the nuance. It's like a lot of these companies are starting to implement like deep-end solutions, but I wonder like if every company, so like if I do it for a company that I buy and I implement like a deep-end solution and I lower the costs, well, open source networks, like my competitor is going to be able to do that as well. And so you're back to square one because if everyone adapts to the new normal, it goes back to if you haven't bought a quality business, you're in a pretty bad spot. Like just
Yeah, yeah,
everything just re-rates down. Um, and likewise, I mean, the benefit of having most of our investors are crypto native funds and founders. So constantly just talking to them and saying, hey, what are you seeing in your venture book that is like worth paying attention to that I could, implement. So I think like I'm bearish crypto in the being said differently, I don't think crypto I don't think the ROI of implementing crypto in a business is big enough today. I think there are still going to be huge successes like hyperliquids of the world that like really profit on like trading and hyper financialization. Those are not the businesses we looked at. We looked at more traditional use cases. And definitely like I think the ROI of implementing crypto is nowhere near the ROI of implementing AI because one of the other things that is worth mentioning that I mentioned that I talked about in the letter was when we go talk to founders now of traditional businesses, when we say, okay, what are you going to do for the business? I'm like, we've implemented AI in our workflows in our company, um, and it's incredible. Like, I mean, I'll let you talk about it. Like that is very real. Like, I'll give you an example. We've been super like we've been very efficient. We have a really small team, and it's deliberate. I couldn't be doing what I'm doing now without AI. I would need a much larger team, much more resources. I mean, I remember the days when I was at JP Morgan, like think about like if today you and I say, okay, hey, you call me and say you should look at this sector. Within like hours, I have a very enriched CRM of some of the best companies that I can go by. A lot of it is super high filter and agents scrape industry databases and really high quality information to the point where I can get on the phone with the founder and it's like I have call notes and it's super enriched. That would have taken weeks and an army of analysts and subscriptions, and now that's no longer the case.
yeah,
And
yeah,
so,
yeah. Yeah.
like that, yeah. I mean, you can talk about what you guys are doing, right?
No, no, no. I mean, anything else, I will. Because Fable is just. I mean, we've got 5.6 coming out from chat soon, which is just mind blowingly good according to the people who have used it. I haven't used it yet, and then Fable is just like crazy. But anything else on inversion that is worth touching on?
Um, I don't think so.
Okay.
Obviously,
There's a lot to talk about.
I
Let's talk about Robinhood.
yeah,
Let's
let's
talk
talk about
about.
something. I'll probably share some versions of this letter just for the benefit of folks because
You
I
should
do
share it
want to.
publicly. I'd push you to
I
share it
want to
publicly.
open
Yeah.
sources to people
Yeah.
because I think it would be helpful for the
Yeah.
ecosystem.
Yeah. The one, I mean, the one thing I'd call out on AI stuff is we have really leaned into. So Fable is insane. If you haven't used Fable yet, it is by far the best model. It is way better than 5.5. It is nuts.
Where do you notice that?
In what it can actually build. So the we have the thing I've become obsessed with over the last week is Claude Design. So we have our I had or I didn't have him do it. He just did it. Our product designer, this guy George, uploaded our design files and design system into Claude Design, and then someone on our creative team, this guy Zach, uploaded all of our creative assets into Claude Design. We can now make any landing page or any slide deck in it literally takes, I'm not kidding, Santi, 5 minutes to
Yeah,
build. So we bought Masari, right? And we need
yeah.
to
How's that
update all
going?
these landing. Yeah, we need to update all these landing pages. So like we need a new landing page for our API. We need a new landing page for this monitoring product that Masari has, which is phenomenal. We need a new landing page for investor relations. We need a new landing page for our contact us form, right? To book a demo. We need all these new landing pages. That would have previously, I would have told our head of product we need this. The head of product would have gone to the product designer. Product designer would have mocked it up, sent it back. I would have been like, we need some work. Then you got to send it off to someone who like is good at the copy. I'm not kidding, Santi. This took 24 hours. The whole thing took 24 hours, and then the product team just built it and then sent it to the engineering team. The engineering team just took the zip file from Claude Design. We designed this whole thing. We didn't even go into Figma. Our design team doesn't use Figma anymore. I mean, I might be speaking out. Maybe they do a little bit, like 5%, but like everything used to be designed in Figma. It's now 5% of the usage that it used to be. So yeah, Claude design has, and then the sales team, by the way. So we took all of our sales decks, and then combined them with this creative our creative design system, put it into Claude Design, and now our sales team, you can literally go into sale, you can literally go into Claude Design, and if you're a seller who hates, the sellers hate making decks, right? They're like, I should be closing, and I agree with them. So actually for years we had a whole idea of like, should we have a product marketing team or like an in-house agency that just builds these assets, because we have so many decks that need to be created. It's such a pain in the ass. They could go in, they upload their granola notes. So I don't know if you use granola, but it's like a call transcription tool. So
Yeah,
you
yeah.
upload your
Best thing ever, by the way.
you upload your granola notes, you combine it with the HubSpot record, you combine it with the internal Slack. So for every sales deal that for every deal that we have, we have a Slack channel. So it'd be like customer inversion if we're trying to sell to inversion. So you then upload all those things, and you can just do it automatically with a connector. And then you say, I'm pitching inversion. It's a 275K deal. We're pitching them investor relations, and they want to buy 50K worth of credits for our API. It will make you a deck in 2 minutes. That's better than we ever could have
Hey,
had.
by the way, um, man, for
It,
all the old
it's
timers,
messed
dude,
up. It's messed up. It's like Fable. If
man,
you haven't used Fable 5, like I'm not debating like, do we have AGI or not AGI, but like this is the first thing when I've been like, you will definitively spend less time at a computer. Like,
yes.
you will just have these. It's the it Fable 5 is really actually what has made everything click for me. Robots and machines will outnumber humans on chain, and Peaq is how they get there. Peaq OS enables any machine to do business on any chain. It turns machines into autonomous actors and liquid assets with ease, giving robots access to capital and the ability to compound their value. That means funds, allocators, and institutions can underwrite, finance, trade, and route capital to machines the same way they handle any other asset. Millions of new potential consumers for any Web3 service, from compute to storage to anything a machine may need, without a human in the loop. Head to peaq.xyz or click the link in the show notes to find out more.
So two things on Fable. One, interesting to note that Cursor and uh, um, Facebook released two models that, like, they're back, right? Like the performance of those two models are very interesting. Anyone that was like short meta, is pretty remarkable what Cursor pulled, like they announced yesterday, right? Like very similar performance and dramatically lower token prices, like an order of magnitude cheaper.
Yeah, well, the other thing that has happened with Fable is that the cost of Fable is ridiculous. It's ridiculous.
It's
So
high. Like when you say ridiculous, it's ridiculously high.
it's ridiculously high. It's super expensive, and because it chews through tokens like no model I've ever seen. So everyone at Blockworks has access to Claude, um, and we're now getting more requests than we've ever gotten internally, being like, "Hey, I just ran out of credits." And so I think this is actually a thing that companies have to figure out: is how do
Mhm.
you keep your AI spend? How do you normalize the AI spend while your token usage is going to grow exponentially, right? And so that's
Yeah.
where some of these, like I think the one Facebook just came out with today is, I think they said 75% cheaper than the Claude, and I haven't dug into it too much, but 75% cheaper than Claude and OpenAI. So this is where things like GLM 5.2 or Kimi 2.7, you basically need like an LLM gateway,
Yeah.
because probably 80 to 90% of the work at Blockworks could just be done with Opus 4.8 or Chat. I forget the model before 5.5. I guess 5.4. So 5.4 sucks, but like maybe one of the previous models. But there's like 10% of the work that has to be done with Fable. So how do you tell the team, like, no, your work is not worthy of Fable right now? This is I think a thing that many founders are thinking about is, I want everyone at Blockworks to be using AI exponentially, but we have to. You can't route every single question through Fable, and so yeah, this is just a. You want me to share your screen? Yeah, here. Let me pull this up. Um, all right, Gavin Baker.
Yeah. By the way, if you want to be at the front of like what's going on, Gavin's a great follow. This
Yeah.
doesn't include the latest model for Meta, but I'm sure the benchmarking stuff is going to come out today, and we can upload it, talk about it next. But yeah, like, you want to talk through this? If not, I'm happy to.
Is this correct? This is
So what you see is Grok has similar performance as Fable, and the average cost per task is
fascinating.
like just dramatically lower. And it seems like Meta also pulled something similar, which, just on this point alone, I agree with you. Like, a lot of people, if you're just prompting like question answer, Fable 5 is like you're using a Ferrari to for a, is not for that. That's why I asked you earlier, like, what are you using it
Yeah.
for? To create, to like code and stuff like that. Um, there's actually an interesting prompt that you could do, which you can ask, like, hey, like, how am I using AI? Like, am I utilizing AI correctly? And I prompted it. It was like, you're definitely using Fable for things that like are just not
Right.
necessary.
Right.
Um, but I think the biggest criticism, dooms, like the biggest bears of AI have been ones that have said, like, the ROI is not there. Like, token prices are really high. Like, companies I think it was Uber and Amazon and or Microsoft that like blew through their budget, and it's like, employees are spending like 10% of their salary on tokens, and that's untenable.
Mhm. Mhm.
Um, this is like Jivon's paradox argument, which is like the price of tokens has come down, the performance is still high in Grok. Like, go, like, you've seen the chart of like percentage of the population that's like using AI, and it's like one red dot. So the penetration
Yeah.
is super low. My reading of this, it's incredibly bullish, like just adoption, enterprise, consumer grade, creativity, like long, all of that. It might not be the best of like whether whether Anthropic wins or OpenAI. Like, that game, I still is TBD, right? Because it obviously puts into question, like,
Totally,
okay, well,
totally.
Fable
But I
5,
think it's a really
yeah,
important thing that we're talking about, which is every founder has to these you have to have your company get as AI pilled as humanly possible, but you also can't have these costs get too out of hand. And so you have to figure out internally, like, you might need custom harnesses to do better routing. You might need better caching, right? Like, if you miss the like cache misses are the easiest way to drive your costs up. You need to keep the context lean. You need better visibility, I think. So like we use Ramp. Like, how do you who's spending money on the tokens and how are they actually spending it? And so I just pulled up our AI channel on Slack while we were talking about this, and I just saw, um, one of our data analysts said, I created a skill so Claude and Codex can delegate their tasks to Grok. And a lot of the comments are like, yeah, this is the way. And so it's interesting. And I actually would recommend people put a full-time employee on solving this internally, like an AI engineer, but not to build AI into your product, which you should also probably do. Um, but to figure out what software are you paying for internally that you don't
yeah,
need, and what tasks happen at the company that are repetitive that you can automate. And then the third thing would be, how do you get your cost down as a company?
yeah.
Yeah,
We have that, by the way. We're a super lean team, but we have one person that is like constantly looking at our workflows and saying,
yeah,
how can we codify skills, memory, like reduce dependencies in one model, like make sure we have a memory layer, like basically following what Andre Kaparsi's like saying about Obsidian and like the memory, like he's like,
yeah,
let's implement this, which is very real. Like, we in some of the modifications that we've done in a short period of time, you see the huge impact, downstream impact of that. And so, yeah, I
yeah,
definitely
hundred
agree with
percent.
your recommendation there.
Should we? We're 35 minutes in. Should we talk crypto?
We have been talking about crypto with the
Should
immersion.
we talk crypto news? This is the weekly roundup. We're supposed to round
It's a
up the
weekly
news.
roundup. I alluded to that, but yeah, let's run through it.
We're supposed to round up the week. Securitize finalized their. I think they officially went public. There's this whole VVV thing, which I'm a little tired of at this point, but we can talk about it because I would be curious to get your take on this dual token equity structure at some point. But probably the biggest thing that happened this week was Robinhood chain. So we talked about it last week. They had just launched the chain, and I would say it's been a very successful week. I think this is my take is Robinhood chain is a very real thing. Anybody with the so to look at the numbers here, I can pull up our data here. There's been over 500 million in volume on Uniswap on the Robinhood chain. That's more than any other chain other than Ethereum mainnet. Robinhood chain is now doing more volume on Uniswap than any other chain in the world. So I mean, yeah, it's 10x day over day. Um, Here, let me try to pull up some other stats. New wallets here. Let's look at new wallets. Robinhood chain. There's about 150,000 new wallets, active wallets yesterday on Robinhood chain. So this is a very these are real numbers, folks. Like these are bigger numbers than I think many of the biggest L2s have ever even seen.
Well, that's
So
not saying much, but, more than BNB? Because that's to me, like, immediately I think of, like, I saw Robinhood chain, I'm like,
No,
Binance chain.
no, I don't think more than BNB, but I think this is what this is telling folks is that this is a signal to people that people are actually. I think the everybody needs their own chain narrative was dying, and I think Robinhood chain is going to actually be quite successful here, and it's going to tell other people that they need their own chain too. And by the way, I don't think everyone needs their own chain, but I do think that Robinhood chain and Base, by the way, are going to and BNB are going to be some of the largest chains in a couple of years.
Yeah. I mean, user aggregation theory in effect. They
Hmm.
control the users, they can point to their own, databases.
I thought
I use
Mike.
the
Go ahead.
well, let's go to Mike. I wanna get your take, like, w what's the benefit of Robinhood launching their chain?
It's what's the point of verticalizing the stack? Like, what's the point of verticalizing? Um, what's the point of Robinhood working with Kalshi for prediction markets, and then eventually, getting rid of Kalshi and just doing it all in house? It's
Right.
to verticalize the stack, which means you have more control and better margins, more upfront cost to do it, but ultimately better
Yeah.
margins. And so
But
my theory where all this goes is that centralized exchanges, all trading will move on chain eventually. So if you agree with that, and you might disagree, but if you agree, like I think most trades that route through Coinbase eventually will just settle onto some DEX. And by the way, Coinbase might own the DEX, or they might
yeah,
own but I think it'll ultimately settle on chain because blockchains are just better ways to move value around the world.
yeah.
And so if you agree with
Yeah,
that,
like a
then
system to put it in software terms for people that are not like, it's a the Robinhood chain is like a system of record to do trade reconciliation and also probably monetize a user a bit more that was gonna go on chain to another chain. And there's a subset of the Robinhood user base that is trading crypto that is going on chain to trade. And you're looking at that in the dashboard and saying, okay, this is growing to a point where we're gonna verticalize and insource it, and we can make more money by launching
mhm,
our own chain. Like there was
yeah.
there was some discussion at the board, and someone said and showed the stats of saying, uh, 20% of our users are trading crypto or whatever the number is. I'm using hypotheticals. And of those, they're going to these other places, and this is how much they're spending. And that's money that we're leaving on the table because we own that relationship. And it's the same reason why Coinbase launched Base. Although not that many users short, like, I don't know if that, I'd actually be curious if Brian wants to come on and talk about it. Like, is the initial what I'd be really curious in asking him, and then Robinhood eventually, Vlad, is how did it line up to expectations after a year or 2?
I mean, I think that Base took some strategic missteps, really pushing into creators and all that kind of stuff. Really simple. Capital markets are coming on chain. Lean into capital markets. And by the way, I think they've adjusted strategy. I do think they get that now, and I think that there is a all-out war between Coinbase and Robinhood to become
Yeah.
and by the way, I'd put Kraken in this. I think Kraken's execution has been phenomenal under Arjun. Um, and so I think that as more trading, like I really firmly believe Robinhood settles 99.99% of their trades in a centralized database today. I firmly believe that number will get lower and lower over the years, and more will move on chain. So if you're Robinhood and you agree with what I'm saying, do you want that to flow to Ethereum or Base or Solana?
Yeah.
You're probably like, well, I actually want to own the chain.
But, like, again, like, the crypto, like, maybe a topic for a broader conversation. I'd love to have a debate to really unpack what you just said there, because I feel like Robinhood's internal systems are pretty efficient because 'cause they're a database and they track it. Like, the soon as you introduce the chain, it has more surface area for things to go wrong, and there I don't know if there's an efficiency to be had. Like, what is the efficiency there? Like where's it gonna show up in their P&L by launching this?
Mhm.
And by the way, is it a chain? Can we call it a chain? Because if it's a entirely operated, validator operated chain, like, is it just like, are you just back to square one? It's a database that I guess runs some security
Yeah.
from Ethereum? I don't know.
Yeah. I don't know. The real answer is I don't know why Vlad and Brian are so excited about Base and Robinhood Chain if they're just single sequencer or
Yeah,
whatever.
yeah. I mean,
But what I will say is, so I was with the FOMO guys, Paul and two of the three founders from FOMO, Paul and Say. That business is a rocket ship right now, and they were at the day that they were in the office, which I ended up recording a podcast with them, and it comes out on Monday or Tuesday. The day they were in the office, they showed me their user metrics, like on their phone. They added, I think it was 12 or 15,000 users the day before. We're in a bear market. There's like 100,000 crypto people who trade crypto probably in the world, like, and they're
yeah.
adding 15,000 a day. So who are
Wow.
those users? They're people
Yeah.
who want to trade things on chain. They're not crypto natives. They're people coming from like TikTok and Instagram and stuff. And so I think as all these assets move on chain, SpaceX pre-IPO, 5x levered copper, it all moves onto a blockchain. You want to yeah, you want to
Yeah.
meet the users where
I
they
think
are.
that
So
makes
I
sense.
actually think of it more from a user perspective and
Well,
what does the
the
customer
the
want?
yeah, the other aspect might be like Robinhood has had a relationship with Citadel, like they are becoming Citadel in some ways by launching the Robinhood chain, like they're sort of, gonna clip fees of flow and, and that might be the answer to all of this. Who knows what
Flows all the
Citadel
way down. Yeah.
yeah, it flows all the way down and yeah, I think probably the thing about fun is like my appreciation for crypto is if you make it so easy for people to create an account with one click and fun with Apple Pay now that if you're on a weekend, you want to trade oil because you saw news or you're at a party, like you onboard in a second. And that's not the case for um like opening a bank account, opening an interactive broker's account takes days, right? And so because markets are so in real time, so momentum, I think eventually, like you asked, the thing that crypto has really good, like, is the user onboarding now is actually much, much faster. And like companies
Yeah.
will say, you can trade today if you want to go long copper because a buddy of yours at a party told you to do it. You could do it now, click of a button, and then you can do the onboarding later.
Totally. Totally.
Right. And I
And
think that's what Robinhood is probably doing. Like they're going to onboard much more users that are wanting to just trade so quickly in options and all this, and they can onboard them much faster than the traditional route with their chain.
mhm. Yeah, yeah. The other thing here is like there is regulatory reasons to like if Robinhood wants to go list an asset on the exchange, it's probably a total pain in the ass. Like I don't really fully know, but like it's a pain in the ass. Or actually, I do know it is a pain in the ass. There's a listings team and a compliance team, and they are at odds with each other. And not just at Robinhood, at every exchange, there's a listings team that wants to grow the P&L by listing more assets, and there's a compliance team that says no, 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 you can't list that asset. So the second you move things on chain, well, you can actually just list any asset that's on Uniswap, or you can list any asset that's on
As
DFlow. If you're on Solana, like FOMO can list any asset on FOMO that's on DFlow and Jupiter and routes through 0x, right? So boom,
Hey,
you've got every asset.
sir, we're back to it's always been and someone should create a meme, it's always been regulatory arbitrage, like always has been.
Always has been. Which
Oh, yeah.
by the way, it's not just that, but like that's not the worst thing. Like users should be able to trade any asset that they want globally, and this system has gotten too privatized or too just archaic. Um, let me share this take from Mike, which I thought was quite a good take. He said, so Mike is, co-founder of Blockworks said, Base and Robinhood chain look similar, but it's possible that the early activity on each is very different. One thing that Coinbase has that Robinhood doesn't is a lot of users who sit on unrealized cap gains on Bitcoin and ETH. And what this actually does, the dynamic here is it makes Coinbase and actually Base a really great market for borrow lend protocols like Morpho, where users who don't want to sell can borrow against their assets. Robinhood probably doesn't have the same thing as much as Coinbase does, right? Coinbase has people who are like buying Bitcoin in 2013 and 14 and 15. Robinhood has more of the retail traders though, like maybe a little bit more degenerate than the Coinbase users. And so Coinbase, again, this is all Mike's take. Coinbase, by virtue of having its L2 on Ethereum and a more conservative listings process, again, that's the listings process we're talking about, doesn't have the same type of meme coin traders that Robinhood does. So in this case, Mike's final conclusion is Coinbase here might look a little bit more like the corporate chain on top of Ethereum, whereas Robinhood looks a little bit more like Solana. I thought that was an interesting take, and yeah, I think I need to think about it a little more because I just read it, but I think tend to agree with him there that these things, it's the underlying users of these platforms that will determine what the chain looks like.
Yeah. Does that then
Which is why I don't think Tempo will ultimately have any users. I don't think because Stripe doesn't have users. Stripe has businesses, and Tempo will build a beautiful blockchain for businesses who need to do payments. But I don't think they'll ever have any meme coin activity or
mm,
Dex activity
yeah, yeah.
because there's
And,
no
and
individual users.
we should have Dan Robinson or some of the team that has been like architecting it. But isn't it like they made a very specific like design choice to optimize, hyper optimize for stablecoins, like primarily for B2B use cases after they acquired Bridge, and so
Yeah,
they just don't care about that stuff.
I think Dan Romero is now running Tempo, so
Dan,
we
yeah,
should
that's right.
have
Oh,
we
Dan,
should have
yeah.
Dan on.
Yeah, I
Yeah,
used to forecast. But the thing about Robinhood, what I found interesting, curious to get your thoughts, is I saw a tweet from Vlad saying like super long RWAs, and then he was like, "Oh, and by the way, like the chain is also good for memes, meme coins."
because he gets it. He gets it. This is the Robinhood strategy. Come to Robinhood. You should trade your S&P, your Qs. You should trade. Just go, buy the S&P. But also, by the way, I will give you GameStop. I will give you the GameStop mania. That what like the GameStop mania was all on Robinhood, and so Vlad understands how important the retail
Yeah,
degenerate,
I
same
think I
day
think I think we
option.
should call it. I think we should stop calling it degenerate. To be honest, I think it's like the reality is like it's an affordability crisis. These are lottery tickets. Markets are more momentum driven. Hedge funds are also conceding to that. This is just a new normal, and adapt,
I
accept,
agree. I think that's a good take.
and
Yeah.
like that's the reality of things without too much emotion because and cash around like the connotation of like degenerates. It's like I've met some really good crypto traders that do pretty good risk management, and they are investing in the frontier of in the trenches of pump.
Yeah. Yeah.
Um,
Can I tell you
and yeah.
who gets this? Who gets this quite well? Who I think maybe people think of as a meme coin trader or meme coin
Ansem.
streamer, but who is so on the nose of this. By the way, yes, Ansem, but I'm thinking of Thread Guy, actually. I think
Oh
that
yeah, yeah.
Thread Guy is more on the nose of what is actually happening in the 25 and under crowd and how they treat
Sure.
finance. And so I saw a Thread Guy tweet on this. He said, everyone is all Robinhood is unserious, blah, blah, blah. But what if memes and crypto fundamentals are foundational to modern finance and never going away? Because clearly it looks that way. And
Yeah.
so it's kind of like it. Look, if memes haven't died through retail getting absolutely rinsed over the last year from memes,
Mm.
yeah, Thread Guy might have a point here.
Sir, any sufficiently advanced technology feels and looks like magic. I would swap advanced technology with memes.
Yeah. By the way, Thread Guy has an amazing piece on Twitter. You can just
The
pull up his
Hamptons?
account on the Hamptons.
Yeah, I was gonna say.
It's a
He gets it.
beautifully
He's so he's you read that and he's like, "This guy gets it." Like, he's introspect like, he understands psychology, and I think in order to be a good investor,
it's
like,
very
you just have
perceptive.
to be on the
Yeah.
pulse.
Yeah,
There's a
it's
good
great.
tweet I saw from someone's like, "If you wanna build a retail brand and you don't understand how 18 to 24 year olds think and shop, you're never gonna make it, like, ever." And I think it's true, and I think
Totally.
Thread Guy just gets it.
Yeah, totally.
Does that make the case
Um,
for, like one question for you, last question. Does it make the case to constantly be hiring younger people, or is age just not an issue, and you find that older people can, like, just really get younger generations?
I think you have to constantly be hiring younger people.
Yeah, kinda delusional, naive, that are gonna, you
And
know
by the way, the banks figure this out. There's like I heard an interview, I think it was with Jamie Dimon maybe, and he talked about the stats of the 2-year analyst program. And he said of the 2-year analyst program, only like 3% of them are around in 10 years. But if someone goes through the 2-year analyst program, they are a and they stick around for 10 years, they're then a lifer. at JP Morgan, and they tend to make it to the leadership levels. And so you almost, yeah, it's you need some process internally at your company to get the 22-year-olds and the 23-year-olds into your company and take bets on them. And actually, I mean, like, if just speaking from experience, like if I look at Blockworks, the best things ever at Blockworks, and specifically the best products, have come from people who are under 30, who have their really have their finger on the nose. And look, we have people in their 40s, people in their 50s, like, not to be,
Yeah,
and they are really amazing at helping scale the business. Like,
yeah,
um, yeah, I'm not going to name names, but there are older people at Blockworks who, like, we could not run Blockworks without them. But
right.
it tends to be the 24-year-old who understands the market so well that drives forward a new like in the token transparency framework. I don't know his age, but this guy Robert, like, I think he's probably 23, 4 or 5 maybe, and
Mhm.
he just gets it. He's just driving it forward. And so yeah, I do think that. And by the way, they're so AI native.
Yeah.
Like, I was on a call with Robert yesterday, the guy who runs TTF, and I was like, "Hey, like, can we get this? Like, you think it's realistic to have this by Friday?" He's like, "Oh, I'll have it to you by tonight." I was asking him for it was a massive amount of work. And he's like, "Yeah," but he's like, "Have you not used Fable?" I was like, "True." So actually, as a manager, you have to update how you think about deadlines and requests.
Yeah.
But if someone's not very AI native and you update your how you talk about requesting information and materials and deadlines to them, they're gonna think you're crazy. So
Right, right, right.
yeah.
That sounds like a great employee because he could very easily say, "Yeah, yeah, I'll get it to you by Friday," and he does it like in 2 hours. But he's like, "Give me more." Like employee productivity goes 10x.
Yeah, exactly. So
That's pretty
VVV. Maybe I just I'm sick of talking about VVV, but maybe just dual token equity structure. As someone who is, I think, probably angel invested in more companies in crypto than maybe anybody except for Balaji, more than Balaji.
yeah. I mean, the number in Masari, I think, is understated. Let's put it that way. I'm over
Yeah,
200 at
yeah.
least, actually more.
So yeah, so I mean, you've seen so many of these. You've seen every structure that exists in crypto investing. Like, what do you think of this dual model? Are you fine? Like, there's two camps here, which is I'm fine with it. Actually, there's probably three camps that have emerged. One is I'm totally fine with it. Doesn't really matter. You got to do what you got to do as a founder. The second is, look, I'm not sure this actually makes sense, but in traditional capital markets, you have so many different structures. You have different types of bonds. You have different, you got the common A, you got the common B, you got the preferred. It actually, like, tokens and equity are fine. You just have to be clear with the market what they represent. And then there's a third bucket, which is you need one vehicle that drives the value of your company, where someone can clearly bet on your company in that way.
Um, it doesn't matter. There are true tokens out there, and because true tokens exist, you're in a bind. Anything that doesn't look like a true token is going to be discounted. And this is why, like, if you look at the best performing, for better or for worse, there's true tokens out there like Ethereum, Solana, Hyperliquid. Um, and there's counterfactuals, right? You could point like Ripple, for instance. Hey, well, they have Ripple Lab, Ripple Equity, and you know, there's always probably examples that you can cherry pick to make your argument. But I think unequivocally, you want to have like, like you want to have one instrument. And, like, I can tell you, like, Karl Malone, for instance, like, has been really good at, like, Liberty Media, for instance, has tracking stocks, and there's, like, very interesting tax reasons why these instruments are useful to like, you wanna go for long Formula 1 where you can buy tracking stock A and tracking stock B, and then you have exposure, but it's more for tax reasons, and it's very like, it's very niche, I would say, for crypto because it's very retail driven, because it's very perception and vibes and narrative, you wanna have one token. Like, the meta is one token, like, just now but it doesn't matter. Why it doesn't matter? Because the right it's just I understand why you have these 2 structures. It is it's just a reflection of the regulatory environment and the lack of clarity that we still have. And we have safe harbors and we have some of these things, but yeah, of course, I don't think there's anyone out there in a perfect world just have one entity. Like one instrument. And again, Berkshire Hathaway did this extremely well. You want to go along Berkshire, you buy the stock, right? That's it. There's nothing else. So you can go buy Coke if you want or buy the underlying positions. There's markets are so psychological. Like there's like a study out there that says like investors can't understand more than one concept, like one narrative. So like
Mm,
just focus on the selling point should be one token. And
mm,
I think any other project that unfortunately, whether it's intentional or nefarious or value extractive or not, like look at all the DeFi protocols. They're like, yeah, yeah, fee switch. And we all understand why, and but the market doesn't care. Like they don't care. And Hyperliquid.
mhm,
And the problem is you have some like Hyperliquid that is just very clean understanding. And this is why I think L1s have been so successful. If you want to express a long view on an ecosystem, you buy Ethereum or ETH, you buy Sol. Like end of story. Like that's it. There's no, there's no, there's like foundation that has some tokens, and then there's the labs that builds the architecture. But like Aave got caught in this whole debate, right?
totally.
And like I don't think we can disagree that there's a why the Token Transparency Act is so important. You want to build trust. Trust is what gives a lot of value. And if you degrade trust, like if you this again, like not to toot your horn, but like I think is there a world where you have two different token and equity, and you have a team that has like really good communication, really good disclosures and transparency, and abides by your standards? Could it thrive? Yeah, like yes, I could see a world where that happens. Like in the same way that like Liberty Media has all these tracking stocks and is super buttoned up in their disclosures and understands how to how to make it work. So that I don't know if that answers the question, but like it's complicated. It doesn't matter, but because tokens exist, you're going to really have a hard uphill battle fighting against something that doesn't look like a token. And the market, again, it doesn't matter what I think. The market sort of already spoke. The token's down. Like end of
Yeah,
story.
yeah. What else this week? Ansem launched a coin and securitized went public. So there's your
And AI is just wonderful, and
yeah,
it,
five.
when you
Okay,
get
so 5.6 live stream going on now. Sam Altman. In addition to the model, three major product things. One, ChatGPT Work. Okay, so this is a competitor to Claude. Obviously.
okay.
Number two is new ChatGPT desktop app. Number three is hosted sites.
Oh wow,
Interesting.
that's great. You can just deploy it through.
Just deploy. So maybe
Nice.
no need to go through Vercel and Replit and or previously you could use like a Vercel and Railgun and stuff like that. Um,
Take a look at this. Suck tweeting. I don't think he's tweeted in a long time. Quote unquote, just to round this out. The pricing from some of the other labs is very extreme and has very high margins. We think that there's a real ability to be able to offer frontier or very high intelligence at a much more affordable cost. Epic
hmm.
pricing war breaking out between these companies.
Interesting. Zuck tweeting. That is
Tweeting. That was the last time
fascinating.
he tweeted.
Zuck Zuck's Zuck's last tweet was 2023 before where it was literally just a Spider-Man meme. And
Yeah.
then the tweet before that was 2012. So this is only his second tweet in
Second tweet.
14 years.
You know it's real when
Oh,
he's
now
out
he's
there.
out here. Now he's out here retweeting people. Oh, he's addicted. He's hooked. He's hooked.
The
That's great.
CEO of Palo Alto Networks also is doing that. Honestly, let's go content of the week because this goes to something that Jeremy and that Invest Like the Best podcast.
I think we're both having the same content of the week this week, which is Jeremy Giffen on Invest Like the Best. If you want to understand why Mark Zuckerberg and what's the Palo Alto Network CEO?
Anish
It doesn't.
or
Shiv. Oh God.
or
Anyway, I saw him at the All In Summit. He's
yeah.
he's fantastic. Doesn't matter his name. Palo Alto. If you want to know why Zuck is tweeting, why Palo Alto Network's CEO is tweeting once a day, why Twitter remains
Nikesh Arora.
Nikesh Arora. By the way, goated CEO, unbelievable executor. I would try to get your hands on whatever that guy's putting out because he's a phenomenal operator. If you want to understand all this and you want to understand why Twitter remains and will remain the single most important place in the world to build a personal brand, go listen to the Jeremy Giffen episode on Invest Like the Best. By the way, that guy, outside of this, more aphorisms than any one person. It's like him and Will something or another.
Well, mandates or yeah.
Him and Will are the like I think if I removed
They're the new priest. What is it? The new priests of the world, not billionaires anymore. I love how he just nonchalantly just said everyone
so
could be a
Santi, why
billionaire.
do you like the episode? Can you summarize it for me? Billionaires are dead and priests
Yeah. Yeah.
scientists, the age of the scientists is over, and yeah, go listen to it yourself. Don't
You know
don't.
what my experience is, to be honest? When I was working at the health startup, we had, like, all these Nobel laureates, and we I think we hosted a dinner, and we had, like, all kinds of billionaires showing up because they all wanna live forever, and they all that's when you realize, like, yeah, money is not the end goal, it's relevance, and everyone wanted to be sitting next to, the Nobel laureate and the Nobel laureate, the Nobel Prize winner in chemistry, and or, it was that's when I understood, like, yeah, I think at some point you would rather have less money and more relevance, and he really gets it.
Is there anything in that episode, anything else that stood out to you, or anything that you disagreed with?
Not much that I disagree with, to be honest. I think the guy's just on it. He really understands it. He also talks about, like,
The
um
thing would disagree with is being a billionaire is still a thing that 99.99% of the world would be thrilled about. And I think that if you live in the world that we live in, or you're in the circles and you go to the dinners and you go to the events, you go to
matters,
the
don't
All
matter.
In Summit, you go to F1, like you're like, oh, that guy's
You
just
you
a
go you attach
he's a
the
lowly
capital B.
he's a lowly billionaire. But for
Yeah,
I think that is a very I think it's important to remember that that is not
yeah.
actually how the world works. So,
I think, yeah,
and
yeah, I
what I
think he's
do think he nailed, sorry, I keep cutting you off, is what I
no,
do think
no.
he nailed is that most billionaires today do feel so. My wife's business, many of her clients are these, she has many companies that she works with, but many also just individual billionaires. And she does a lot around crisis and reputation management, and many of them feel like they were important 5 or 10 years ago, and they're no longer their billionaire status no longer makes them irrelevant, like no longer makes them relevant. So I think what he nails is that being a billionaire used to be, it was that alone, that title alone was the thing that made you relevant, and now
Yeah.
you need to post on Twitter to be relevant.
Yeah, I would say, like, it's always been like that, I think, because I've talked to people that were billionaires, like, 10 years ago, and they would probably tell you the same. Like, they just deeply, unless you have, like, your true identity and you have, like, it's a lot it's, we're all having the same problems of, like, you wanna feel
Mhm.
relevant, you wanna feel validated, we're all social species, and so you want to be part of the tribe. And Peter Thiel, I think Peter Thiel by far remains, like, the clearest thinker of our age, I think, um, which is, like, mimetic desire. It doesn't matter how much money you have, like, you're gonna wanna copy people, and it's incredibly hard to resist that biological primitive urge to copy. And, like, I think only few people like him and Elon, like, have truly defied that gravitational pull to conform. But if you're a billionaire, doesn't matter, dude. This does not matter. You will constantly crave and seek validation.
Yeah,
Like,
yeah.
and you wanna, and it's all the signaling, right, or attached to that. I do wonder,
Let me ask you.
in a
Let
world
me
of
ask you.
abundance,
Say it
like
again.
like in a world of abundance, like, if you go back to ancient, like, Athenian times, there's, like, a whole class. I think he mentions in the podcast, there used to be a time where people got paid to think. Being a public official was the highest honor.
Yeah.
Being, like, you had a class of philosophers like Plato, Aristotle, like Mark. That one of the more important things that he talks about, at risk of, like, being a spoiler alert, is this idea that we glorify the grind. And I've really experienced that moving to Europe. I'll leave it at that. I think there is an art, and you really have to start questioning, like, the freedom, what it means. And I've always felt output driven. Like, that's what I think it's very difficult because you want to feel like you're relevant, and for better or for worse, you want concrete evidence of that. And there's no better concrete evidence of that, of time inputs, not so much outputs. Time input is such a concrete thing to say. I work 100 hours a week. You deserve my respect, sir. It doesn't matter. It doesn't matter in a world where you can do shit in, like, 2 seconds.
Mhm.
And that adjustment, I don't think we figured out what that means for our brains.
Yeah. My thought, so I agreed with most of that section. The counter to it is that I really genuinely do feel busier than I've ever felt in my life. And I think the reason for that is because
Do you have a kid? You have a baby at home. You're cleaning diapers.
Because of a child. No, well, that, but also because AI is very deceptive in its ability to make you feel more productive. It is it is the great enabler of starting new projects. And so there's, I have a laundry list of things I've always wanted to do and build at Blockworks. We've never been able to build them because we're constrained by people. And now these things can actually take something from 0 to 60 in, and I'm not kidding, 3 hours or 1 hour or 2 days. But it's very deceptive because once you get that thing to the MVP stage, you actually still need a bunch of people and you need to spend a bunch of time to do it. So I feel, and many other founders feel, busier than ever because they're actually starting so many things. You probably saw this in
Oh,
our investor letter that
yeah.
sent out, last week, which is, the lowlights of Q2. The thing that I think we're not doing well at Blockworks is we're doing way too many things. And
Right.
this is
Yeah.
probably an output of me and Mike thinking that AI can help us. Like, we're trying to push the boundaries of what AI can do internally, but that's probably the
But
downside.
but the I think you've just summarized the bu the bull case for AI, which is you said something there that's so important, which is you're just gonna launch way more creative experiments, and in order to execute them and see them through and really scale them requires humans, and so requires new skills, but it's not that, like, you can take it from 0 to 100. Like, 0 to 1, yeah, maybe, but 0 to, like, 1 to 100 requires humans, requires that, and, yeah, but I don't, I'll say, it is hard for me to go to sleep because I have a cabinet of ideas, and now
Totally.
I don't need an engineer, and there's no degradation in the message and the output doesn't require $100,000 and a consultant and a
Totally.
month of work. It's like 2 hours, and you're like, "Holy shit, let's
Holy
go."
shit. Yeah. Yeah.
Like, holy shit, I don't
Yeah.
it's wow, yeah.
Yeah, my wife was like, Why do you always leave your laptop open, and why are all of our computers still running overnight?" So, all right, folks. Santi, good to have you back. You're looking very dapper today, by the
Great to
way.
be back.
What's
Thank
going
you.
on?
Well, just Cellini conference.
Cellini. Nice.
They
Nice.
said business casual, so, this is
So
business
Cellini
casual.
coffee is probably like 15 minutes from your door, no?
Depends on how fast you drive. Yeah.
Depends which car. Depends which car I
Exactly.
chose.
Yeah, 15 minutes to an
Awesome.
hour.
Well, good to be with you guys this week.
Great to hang.
Monday or Tuesday, we're releasing an episode with the FOMO founders, Paul and Say. Really interesting. There have not been many consumer businesses, that have taken off recently, and they are just exploding. And so it's, yeah, a really interesting episode. We talked a lot about marketing, customer acquisition. What are you doing to that mic?
I'm not leaving.
Yeah, I'm
I'm not
not
leaving.
leaving.
I'm not fucking leaving.
All
I'm not
right,
leaving.
folks. Have a good Friday. Cheers.
Great weekend,
Watch the
guys.
World Cup.
Yeah, no, great to
See you,
see you,
everyone.
brother. Take care.